my advice is always, hey, lock your interest rate today. And then if it decreases, we can obviously renegotiate the lock. And if it increases, we're safe. You can't always time the market perfectly. And sometimes you give the wrong advice. So
Matt, tell me what you've seen recently. And does that give any indication on what's going to happen, let's say in the next quarter? I mean, can you just give us a peek into some deals you've worked on?
I struggle to do that because it feels like every time I try to give some insight or say like, hey, the basis points are going to reduce by 25 or they reduce by 50. And, we just steadily see it climb. There was a time where I was telling everybody September 11th, they reduced it 50 basis points. I've reached out to all my past clients who purchased over the last year. And I said, hey, refinance is coming. We're going to see this 50 basis points reduction. Mm-hmm. I get everyone started with the process. We're ordering appraisals. We're getting applications sent out every single day from September 11th. Just ticked up. And everybody's sitting around waiting for this refinance to happen, and it never did. So I'm trying to predict the market thinking that it's going to decrease when in fact it increased steadily through December into January. And we're like, when the heck is this reduction going to happen? And it has yet to happen. It still hasn't.
Yeah. And the reason I ask that is because I have conversations with bankers and I just kind of want to know, hey, what's happening in your world? And, so this one banker that I was talking to, he's on the commercial side. So he deals with loans that have a natural trigger point of they have a balloon, for sure, need to be either replaced with another loan or restructured. And so there's guidelines from his bank, but also just banks in general. Like what is the appetite for new loans, and what is their credit guidance on that? And really his point was, hey, and this can change tomorrow, but the existing loans that are coming due that may have some stress to them relating to interest rates as today, they're just going to be structuring it and extending. So taking the current terms, extending how they can. There's going to be a point where that can't happen anymore. I mean, there's the appetite for a specific bank